Is Pfizer stock a millionaire maker? That's the million-dollar question we are exploring today. In the face of a stock market that's sporting record levels, Pfizer, the pharmaceutical titan, seems to be navigating a different course. Over the past 12 months, Pfizer's shares have taken a plunge, registering a 28% decrease. The reason behind this? Investors are beginning to question the company's prospects for sustained long-term growth. Pfizer is currently in a transition, pivoting towards fresh growth opportunities. But as we all know, transitions can be tricky, and investors are not always patient with turnaround stories. The uncertainty of what lies on the other side of this transition is causing some jitters in the market. But here's a thought. If you're in it for the long haul, this might just be the perfect time to give Pfizer stock a second look. With shares trading at a lower price point and potential growth looming on the horizon, could this be the ticket to your millionaire dreams? Pfizer's strategy has been interesting. The company has been raking in billions from its COVID-19 vaccine and putting that money to work. Far from resting on its laurels and expecting the COVID revenue stream to flow indefinitely, Pfizer has been preparing for the next phase of its growth. It's been acquiring businesses and making investments that could potentially set it up for future growth. This proactive approach is a testament to a company that's oriented towards growth. Pfizer's acquisition spree has been quite something. The largest deal in its portfolio is the $43 billion acquisition of cancer company Seagen. This acquisition is expected to significantly bolster Pfizer's oncology business, potentially adding $10 billion to its top line by 2030. But it's not all rosy. Pfizer is also facing a potential $18 billion loss in revenue due to generics after some of its key drugs lose patent protection in the coming years. With Pfizer's stock at a lower price point and potential growth on the horizon, today we dive into whether this could be the stock that makes you a millionaire. Pfizer has been implementing a growth strategy that is worth noting. This global pharmaceutical giant hasn't been resting on its laurels or relying solely on the profits generated from the COVID-19 vaccine. Instead, it's been putting that revenue to work, investing in acquisitions and opportunities that set the stage for long-term growth. One of the most notable moves Pfizer has made is the acquisition of Seagen, a leading cancer company, for a whopping $43 billion. This strategic acquisition plays a fundamental role in expanding Pfizer's oncology business, a sector that continues to witness significant growth and innovation. Pfizer predicts that by the year 2030, Seagen could contribute a staggering $10 billion to its top line. But Pfizer's investment strategy doesn't stop there. The company has been actively acquiring other businesses as well, diversifying its portfolio and strengthening its position in the pharmaceutical industry. These acquisitions include Biohaven Pharmaceuticals, Global Blood Therapeutics, Reviral, and Arena Pharmaceuticals, to name a few. By the year 2030, Pfizer aims to add up to $25 billion in revenue to its business through a strategic blend of these acquisitions and its pipeline. This growth strategy paints a promising picture for Pfizer's future. It's not just about surviving the present, but thriving in the post-pandemic era. Pfizer is investing today to ensure its growth tomorrow, a sign of a forward-thinking, growth-oriented business. However, it's not all smooth sailing. Pfizer is also bracing itself for potential challenges. The company faces a possible $18 billion loss in revenue due to the impending expiration of patent protection for some of its key drugs, such as Eliquis, Vyndaqel, Ibrance, and others. Pfizer's strategic investments have set the stage for future growth, but it's not without its challenges. This blend of strategic foresight and proactive investment sets Pfizer apart, but only time will tell if these calculated risks will pay off in the long run. Stay tuned as we delve more into the challenges that lie ahead for Pfizer in the next segment. Despite the promising growth strategy, Pfizer also faces significant challenges. The road to growth isn't always smooth sailing, and Pfizer isn't exempt from this truth. One major hurdle that looms over Pfizer's potential upswing is the impending loss of patent protection for some of its key drugs. Patents are like golden tickets for pharmaceutical companies. They provide exclusive rights to produce and sell a particular drug for a set period of time. This exclusivity allows companies like Pfizer to charge higher prices and maintain a competitive edge. However, once a patent expires, other companies can produce generic versions of the drug, often at much lower prices. This can lead to a significant drop in sales for the original manufacturer. For Pfizer, several of its key drugs are set to lose patent protection in the coming years. These include blockbuster drugs such as Eliquis, Vyndaqel, and Ibrance, among others. The potential impact? A possible $18 billion loss in revenue. Yes, you heard it right, $18 billion. That's no small change, even for a giant like Pfizer. However, it's important to remember that this is a common challenge faced by many pharmaceutical companies. Patent cliffs, as they are often referred to, are part and parcel of the industry. The key lies in how a company navigates these patent cliffs and how it innovates to stay ahead. Pfizer isn't sitting idle. It's actively investing in new businesses and making acquisitions that could potentially offset the loss from patent expirations. The company's largest acquisition to date, cancer company Seagen, could contribute an estimated $10 billion to its top line by 2030. Moreover, Pfizer plans to add up to $25 billion in revenue to its business by 2030 through a combination of acquisitions and its pipeline. This aggressive growth strategy could help the company sail through the choppy waters of patent cliffs. The loss in revenue from patent expirations is a significant hurdle, but Pfizer's aggressive growth strategy could offset this. The road ahead may be tough, but Pfizer seems to be gearing up for the challenges. Will it be enough? Only time will tell. So, back to our original question. Could Pfizer stock help you become a millionaire? If we consider Pfizer's growth strategy, the company is positioning itself to be a future powerhouse. It's not just resting on the laurels of its COVID-19 vaccine success. Rather, it's using that windfall to fund acquisitions and investments that could propel its growth in the coming decade. From its $43 billion acquisition of cancer company Seagen to smaller deals with Biohaven Pharmaceuticals, Global Blood Therapeutics, ReViral, and Arena Pharmaceuticals, Pfizer is laying the groundwork for a robust and diverse portfolio. By 2030, the company aims to add up to $25 billion to its revenue through this combination of acquisitions and its own pipeline. However, it's crucial to remember that investing in stocks always carries risk. Pfizer is not immune to challenges. The company could face an $18 billion loss in revenue due to generics after some of its key drugs lose patent protection. It's also in the midst of a transition, pivoting to new growth opportunities. This phase can be turbulent and the outcome is uncertain. That's why it's essential to do thorough research before making investment decisions. Look beyond the headlines. Dive deep into the company's financials, understand its growth strategy, and assess its market potential. Consider the broader industry trends and how they might impact Pfizer. And remember, investing is not about getting rich quick. It's about making informed decisions, being patient, and understanding that there will be ups and downs along the way. In conclusion, while there are no guarantees in the stock market, Pfizer's stock does present an intriguing possibility for long-term investors. With its proactive growth strategy, a diversified portfolio in the making, and a potential economic upswing on the horizon, it's a stock that could potentially help you achieve millionaire status. While there are no guaranteed millionaire makers, Pfizer's stock certainly presents an intriguing possibility. Pfizer's journey has been a fascinating one to watch. We've delved into the heart of Pfizer's narrative, a tale of resilience, strategic foresight, and a pursuit of growth. Despite the stock market scaling record heights, Pfizer's shares have seen a dip of 28% over the past 12 months. This decline is largely due to concerns about the company's long-term growth prospects, especially as it undergoes a significant transition. But in the throes of change, Pfizer is far from stagnant. The company is actively seeking out new growth opportunities, a quality that should resonate with any astute investor. Now might be the opportune time to give Pfizer's stock serious consideration. With a lower price point and potential growth on the horizon, Pfizer might just be the stepping stone to millionaire status for some. Pfizer's strategy of reinvestment has been commendable. The company has been channeling the billions it has generated from its COVID-19 vaccine back into the business. It is preparing for the next phase of growth by acquiring businesses and making investments that should pave the way for future expansion. The pharma giant has made several deals, the most notable being its $43 billion acquisition of cancer company Seagen. By 2030, Pfizer estimates that Seagen could contribute $10 billion to its top line. Other recent acquisitions include Biohaven Pharmaceuticals, Global Blood Therapeutics, ReViral, and Arena Pharmaceuticals. Through these acquisitions and its pipeline, Pfizer aims to add up to $25 billion in revenue by 2030. However, the road ahead is not without challenges. Pfizer could face a possible $18 billion loss in revenue due to generics, as some of its key drugs lose patent protection. Yet, it's evident that Pfizer is a company that refuses to stand still. It's a business in transition, and while that may bring uncertainty, it also brings opportunities for growth and innovation. Whether Pfizer's stock is a millionaire maker or not, it's a story of transition and growth that will continue to unfold in the years to come.